I believe that we will have a bounce back as the fundamentals still look very good. This sharp correction was inevitable and it gave opportunity to investors to buy their favorite stock at a discounted price. So today we are going to be talking about the meltdown of the Nigerian Stock Exchange. So on the 11th of November 2025, the Nigerian Stock Exchange saw 4.64 trillion naira wipe off its market capitalization in a single day dip. The market capitalization of the Nigerian exchange fell from around 94.5 trillion naira down to about 89.9 trillion naira during that particular session. The Nigerian Exchange All Share Index dropped by 5% in just one day on the 11th of November 2025, marking its highest single day fall in 15 years. Wow guys, that is huge. In 15 years, this is the highest drop we have seen in the Nigerian Exchange All Share Index. The All Share Index is one of the most important indicators of how the entire stock market is performing. So this indicator speaks volume as it tells the trend in the entire Nigerian stock exchange market. If the index rises, there is investors' confidence and economic optimism. But when you hear that the All Share Index fell by 5%, it means the total value of all listed stocks on the Nigerian stock market dropped by 5% on average. Only a few stocks closed in the green on that day. Most blue chip stocks were hit by large sell-off. Investors' confidence appears to be shaken. The sell-off was driven by share panic. This broad decline suggests either macro risk or market-specific risk. The macro risks include the economy, currency, foreign flows, etc. Economic impacts such as geopolitical tension by the United States President's speech triggered panic in the mind of investors, and that prompted large sell-off from the Nigerian Stock Exchange. We also have currency concern, such as the naira volatility and how exchange rates changes will affect all earnings, valuation, and investor sentiment of the stock market. Foreign investment flow, such as emerging markets or frontier markets like Nigeria, often see large inflows during optimism and outflows during global risk-off, which can acutely shift sentiment. Market-specific risks include factors like valuation, regulatory policy, etc. The valuation of the health of blue chip companies, since many of the large cap stocks moved down the most during this dip, shows that there were massive sell-off amongst investors that invested in large market capitalization firms. There's also regulatory policy, such as government action like the new tax regime. There's a new tax regime that borders on capital gain tax. Listing requirements can also shift sentiment of the market quickly. So despite this dip that we've seen, the market is still up by 50%. That shows how far and how well the NGX has been over those couple of years. The broad market correction of the Nigerian Stock Exchange suggested that it is partly driven by the threat by President Trump of a possible military action against Nigeria due to the genocide on Christians in the country, and labeled Nigeria a country of particular concern over alleged violence against Christians. So there were so many news, there were so many narratives flying about concerning the threat speech made by President Trump on the fact that there are a lot of Christians being killed by Muslims in the country. A lot of people were saying that it's going to deploy soldiers, American soldiers, down to Nigeria to help fight the insurgency in the country, to help fight the terrorism in the country. A lot of people said that when he sent the US military down to Nigeria, we are going to be invaded and our natural resources are going to be wiped off. So that sent shockwaves of fear and panic into the mind and heart of investors, thereby making them know that that the stock market could be volatile, or the stock market could be responsive to such threats and causes them to sell off their investment, to sell off their shares, just so that they don't accrue losses on their investment. This triggered a sentiment shock. Investors interpreted the threat as increased geopolitical risk, which affects foreign investment, currency stability, general market sentiment, and confidence, that prompted investors to pull back. The mass sell-off was also driven by profit taking, because the market was already primed for correction anyways. We've not had such correction like this for 15 years, so it would have happened whether we like it or not. And I don't know if this was the best time for it to happen, but it was instigated by all of these factors. Also, the advancement of the capital gains tax regime with burdens for investors also played its own part. Furthermore, the Nigerian sovereign bond also took a hit. We saw the price of our bond slip to 0.52 cents on Monday, 10th November 2025, just right after President Trump's speech. But thankfully, this was short-lived as the price quickly retraced back up. I'm going to give my opinion about what I think happened, considering the fundamentals and also what hit the news and the media. Having looked critically at the situation, I will say that President Trump's threat speech, the new tax law on stock capital gains, currency risk, and domestic macro issues all played a part in the sharp dip. If you are considering if this is a long-term concern, the geopolitical remarks can cause short to medium-term turbulence, but the underlying fundamentals and local policy or regulatory environment matter more for sustained performance. I believe that we will have a bounce back as the fundamentals still look very good. This sharp correction was inevitable, and it gave opportunity to investors to buy their favorite stock at a discounted price. Remember that the Edet season is around the corner. That will boost the economy when the mass inflow of foreign exchange starts coming in. As you know, the Christmas and end of year holiday is coming. This will see mass influx of Nigerians back home, back to the country, and all of our favorite goods, our favorite services will be patronized much more. So this will directly impact the profitability, the transactions, and the growth of all of these companies in the Nigerian Stock Exchange. So we will see increase in their valuation, we would see increase in their profitability, and eventually the market will bounce back moving into the December and January period. So I strongly believe there will be a bounce back and we will thrive in all of these situations. I want to trust that you've gotten valuable information from this video. If you actually did, please hit the like button, subscribe to the channel, share this video with your friends, loved ones, and colleagues. If you want to know about the new tax regime, specifically the capital gain tax, please kindly watch the video over here. This will spell it all out and make you understand how this new law would affect your investment and what you have to do to make sure that you're on the right path to secure your profit